are still keeping it fresh right here on Newstalk93fm. You're listening to Fresh Start, the best start for your day. I'm Sharon Hay-Webster.
And I'm Clyde Williams, and it's now time for Counterpoint. In Counterpoint today, it's about good credit, bad credit.
And this one has nothing to do with Mr. Chin and the shop. The time is approaching when we will have a system to monitor the credit information of each Jamaican. Creditinfo Jamaica opened its doors in 2012 and has gone live, so to speak. What does this mean for borrowers and lenders? And to share with us this morning, we're joined by Creditinfo Jamaica's CEO, Megan Deane. Good morning, Megan.
Good morning.
Morning, how are you doing?
Oh, I'm blessed and highly favored. Thank you.
Okay then, thank you. And Marketing Manager Camar Williams. Good morning, Camar.
Good morning, how are you?
Wow, yes, big voice.
I don't want to say the same as Megan, but she says it more beautiful than I. So
I guess. So, Camar,
yes.
Since I have you here now, gone live, good credit, bad credit, what does that mean?
Well, going live for us means that we have started with the first set of subscribers that have provided us with information in the database. And these are 4 institutions among the 32 that we have signed up as credit information providers. So at this very day, as of July 1st, users of our system would have been able to access reports on their subjects, provided that their information has been provided information is currently in the database.
What does that mean?
Okay, so our credit bureau system captures the credit information as prescribed by the Credit Information Act on subjects that are found in the credit information providers database, and these are the banks and the financial institutions, the MFIs, and quite a number of others that are specifically stated there. So essentially, if someone stepped into the door of any of these financial institutions, and the institution is required to do a background check on this individual, they would have been able to enter their TRN number and their database as our unique identifiers and search the database to find any information that is cross-referenced across any of the information providers' data that is currently there.
So, Megan, in that sense, if I am going to negotiate a major loan, for example, for some new business venture that I'm taking on, and my house had gone up for auction, and I had fallen off on my car payments, but I want to do this loan because I believe this is going to bring me the turnaround, but I say nothing to this new financial institution that I'm going to. Are you saying, therefore, that once they log the information, as Camar has just indicated, Magusi Cook?
No, not at all. What the credit bureaus do is provide the prospective lender with full information on the borrower.
Mm-hmm.
So the fact that you had losses in the past,
mm-hmm.
or an incapacity to service facilities that you had in place does not necessarily mean that your goose is cooked. What it means is that the organization will work a little bit more closely with you to structure the facilities that they offer to you, to ensure that you can manage the financial exposure that you're going to take on. So what we say to people is, if you know that you're running into problems, don't just sit and watch it happen. Like when, obviously, we're now speaking in the past, people will now have to be operating moving forward.
Yes.
But somebody who knows that they have whether lost their job or a death in the family and they can no longer service their mortgage the way they used to, don't just stop paying the mortgage. Go into your mortgage company and restructure the facility, because most institutions, in fact all I would say, want to work with their clients. They don't want to foreclose on anybody's home. They don't want to sell your car. They want you to be in a position to pay them the interest that they charge, because that's the business they're in.
Mm.
So if you don't do that restructuring, then the report that is sent to the Bureau indicates that you are not holding up your end of the bargain. And so your credit history will reflect that, and the credit score that you get will be low. If you restructure and keep up the payments, even if it's a lower amount and a longer time to pay it off, the report going in will be good because it will be saying that you pay your obligations. And then, just to add to that, when you go in, if they have full information, and even if you have not handled your responsibilities well in the past, what they're going to do is look at your business plan for this new venture, maybe take a little bit more time to ensure that the viability of the project is what you will do. Will they agree with what your projections are? They will run the sensitivities on a worst case scenario. What if something bad happens? What if things don't go exactly as planned? And they may still give you the facility, but they may ask you for more security. Whereas if you have excellent credit history and credit score, they may reduce the collateral requirements. They may give you a break on the interest rate. So it's very important that people understand what having good credit history and a credit score that's acceptable in terms of the risk exposure that an institution wants can do for them.
Camar,
Yes.
how far back are we going in terms of drawing a line as the base information for one's credit history?
Well, legislation allows us to hold up to 7 years worth of history on any individual that is, of course, within the database of any of the information providers.
Right.
So we can go that far back. I would say that in dealing with some of our subscribers, we recognize that there may be some challenges in trying to acquire all that information. And so in the first part of the project, or the introduction of the Bureau, you find that the data would mostly be current, but of course it would allow persons the opportunity to trigger their affairs in the most efficient manner, so as to ensure that the data being represented, of course, reflects a very good reflection of how things are at current.
How does one how does one become part of your database?
Well, firstly, you have to be labeled as a credit information provider under the Credit Reporting Act of 2010.
Who are those?
Yeah.
And these are the banks who are licensed under the Bank Act, of course, the credit unions, the microfinance companies who are exempt under the Money Lending Act, the NHT specifically named, the Development Bank is specifically named, Student Loan Bureau, the mortgage companies, any company in the business of treating with hire purchase. Am I leaving out any, Megan?
No, I think that covers it.
I think that covers all the
hire purchase, let me just pause on that. That would include companies where persons could go in and buy a piece of furniture and have to pay on a monthly basis or so?
Right.
Yes.
So this
Okay.
you refer to.
What about insurance companies?
And insurance companies as well.
All right. Now, so once you're doing business with any entity or person who fall under those heads,
Right.
your information, you have to agree that your information is shared with a credit bureau?
Well, legislation allows these institutions to provide us with the credit information on their constituents without the consent of the consumer. However, I would say that the legislation is extremely protective of the consumer. And so in order for any of these subscribers to pull any information on any subject that they're treating with, it requires that that subject would have provided them with a consent to pull the information. So just to reiterate, that legislation allows us to collect that information from them without the consent of the customer, but in order for them to pull the report, a consent is required.
All right, let me walk it through. So I am doing business with Bank X, right?
Yes.
I've had several mortgages. I've liquidated those mortgages, or even if it's not fully liquidated, partially.
Right.
And then now I approach company Y to do some business with company Y, a real estate developer for argument's sake. I would have to give company Y permission for them to then access my credit information, which will be largely information on my dealings with this bank.
Right.
That's what
that real estate developer has as a business that prescribes them being treated as a credit information.
all right, let me use insurer, somebody who, right, let me use an insurer.
Right.
I would have to authorize that, I would have to consent to that insurer seeking to pull information from the credit bureau, Creditinfo.
That's correct.
Okay.
One thing I would also point out, though, is that before the credit information providers, any one of those kinds of entities that Camar spoke about, sends information to the Bureau, the legislation requires that they must advertise to the public at least 7 days before they send over any information that they're going to do so. Presumably, this would allow any individual who does not want their information that's in the database to go over to the credit bureau to go and settle their liabilities and take their names out of the system. The only issue with that, as far as prospective borrower is concerned, is that you would literally not be able to do much business anywhere, because most institutions are going to require that they see your credit history,
yes,
unless you're going to cash secure every single thing or provide full collateral security. They're going to want to know. And if you want the facility, then you will likely consent for them to see, yes, your credit history.
Yes.
So really and truly, persons are just going to have to get comfortable with the legislation, understand that it's not meant to be a negative, it's meant to be a positive. Because if you can show a prospective institution that you have a good credit history, that is almost like money in the bank. You can use that credit score as a negotiating point if it is good. In the score range that we're coming up with, the score range is between 250 and 900. And obviously, the closer you are to 900, the better of a credit risk you're likely to be assessed to be. And you can say to your prospective lender, look, my credit history is great. Give me, 1 percentage point off what you would normally give somebody who is down there, who you're going to have to spend more resources to monitor and that kind of thing. Right. And give me a break on the security requirements. I have shown that I can manage my responsibilities. That should mean something to you. And there are other institutions that want me. Yeah. Because believe me, people are going to start to fight over people with good credit history.
Camar sounded as if you wanted to comment.
I want to just underline a point which is of significance. In other words, the question of determination of whether I get a loan going to have a lot more objectivity being brought to it, and based on one's history prior to seeking this loan.
That is correct.
Yeah.
Absolutely.
Right. Okay.
But Camar, you had sounded as if you wanted to come in to make an intervention just there after Megan's input.
I think Megan had comprehensively covered the response.
But what I'd wanted to ask though is, how do you get that low from the 250 up to the 900? Explain that reach for us. How does one become ranked at 250 as against coming out at 900?
Well, first of all, the credit score is developed using mathematical algorithms that persons sit and really look at how the payment patterns of people and how this contributes to the calculation of a score. But first of all, making sure that you adhere to the payment plan that you have negotiated with any facility is one way of ensuring that you move further up the scale. The kind of facility that you have also affects your score. If you only have a lot of short-term rollover type facilities, you will have a good credit score, but it won't reach way up there unless you have a big facility, longer term, like a mortgage or a motor vehicle loan that has a long, so that they can see that it is not just short-term facilities that you can manage, but yes, you can manage bigger facilities. The higher your credit availability, like let's say you have $100,000 credit card limit, but you really consistently only use $10,000, yes, so that you're not maxed out at the $100,000. Even if you're paying the minimum on the $100,000, that will indicate that you have a higher capacity to borrow, and so you would likely get a higher score if you maintain a lower usage to availability ratio. All of these kinds of things. If you pay early, if you pay the full amount rather than just the minimum amount, and then you go down to zero balances very quickly. All of these kinds of factors are put into the algorithm, and they calculate the score. I mean, I'm not a mathematician, but the people who do this are experienced in producing credit scores and to allow institutions to rely on the predictability of the score in order to make a quicker lending decision, and as Camar said, a more objective lending decision.
I think quite a bit of actuaries, I imagine, would be working with this information.
Well, actuaries calculate probabilities of risk and so on and so forth. In the credit industry, it's not so much actuaries that we use as mathematicians and statisticians.
So the mathematicians and statisticians are local ones, or is it that we've utilized talent from overseas and enabling our local talent to come up to the scratch?
Well, we are owned by Creditinfo Group, which is an international company headquartered in Iceland. They have credit bureaus in some 14 countries outside of the Caribbean, and recently got licenses in Guyana and also acquired a credit company in Barbados. We have our own team of analysts, mathematicians, and that create the credit scoring. Credit scoring is a very specialized field, and initially in Jamaica we will be using an expert model because we need to have at least, say, 18 months ideally, but certainly no less than 12 months of the credit history in country to have a localized score developed. So once we get to that point, they will be developing a localized score for Jamaica, incorporating some of the nuances in our market. But as it is currently, the mathematicians are international. But we certainly are going to be seeking to create our own capability for the development of scoring with local mathematicians and so on.
Well, we want to talk about the building up of our own capabilities when we come back from the break. Please hold on, Megan and Camar.
Okay, then.